Hey guys, I just wanted to tell you a little bit about what my predictions are for this particular year. 2023 is going to be a pretty crazy ride from every indicator that we see so far. I mean, you have a couple things. You have the stock market is a mess, and then real estate prices are really beginning to stagnate. The Fed looks like they're going to continue to raise interest rates, which means the prices are just going to continue to come down or to stagnate. So a guy like me that has all his money invested, I mean relatively all my money, like 95 to 99% of my money invested in real estate, this is a big deal because my plan was to refinance each year and buy more real estate, and also to take some of that money as money that I've earned, as well as some of the cash flow and stuff. But all of that is kind of more up in the air. So what do you do this year? What do you do differently? And also, I'm a real estate agent, so if fewer people are buying, if I can help fewer families, and I also theoretically stand to make lower commission. So there's a lot of things that just make you feel a little bit worried about the way the state of the economy is. You have inflation higher. Government has it at whatever they have it at right now, 8% or something, but the actual rate is probably well over 10%. I've seen credible sources that had it at 16% recently. So I mean, there's a couple things about that. Like you wanna be smart about how you invest. If inflation is going to be a thing, then the debt that you take out, you have to think of it a few different ways. You have to think about how, as the interest rates are higher, your payments are higher, but then you also have to think about, well, what about the rents? If fewer people are buying homes, what's happening on a macro level? What's happening is that the people who are in this stratosphere of buying homes have now been pushed down into renters. So the supply and demand for the renter has actually increased, which means the rents are going to be squeezed up. So your rents are going up. So in this crazy environment, you actually have a rent squeeze. You have higher payments for your higher mortgage, but because the rents are being squeezed up, the inflation is actually starting to eat away at your debt. So this is a concept that Jason Hartman says a lot. I really like the way he thinks about this. He calls it inflation-induced debt destruction. Inflation-induced debt destruction. This is a really cool concept. So this means that as the inflation goes, and it goes, even if it's at 2%, it doesn't matter if we're in these crazy inflationary times or just regular times. Little by little, as you move through time, inflation itself, not your hard work, eats away at your debt. And the way we're doing it, where you have tenants and renters paying the mortgages that we're taking out, this is really in our favor. So in terms of people ask me, aren't you scared to buy? I have friends who tell me, you're crazy to flip right now. You're crazy to do buy and hold, or buy, hold into a flip, or short-term rental, as a BRRRR that becomes a short-term rental. Like all these different strategies, people think, people who are not super financially educated go, you're out of your mind. But it's not true, because the fact is, as long as you hold enough equity where if things go a little haywire, you're not upside down on anything, which as long as I have a renter, I won't be upside down, then I'm actually pretty well cared for. And one of the things I track, and I recommend this, is track how much equity you have. Like in other words, if you own, I'm at 41 units right now. I think 42. I'm selling one, so I think will be at 41, or I will be at 40. Anyway, I'm somewhere around there. I'm in the low 40s of total units, and what that means is that for me to track my equity, it's not as simple as just looking at one loan and going, okay, I have 20% down, so I have 20% equity. I have to look at where each loan is and what the total value is and stuff. So just like a kind of rule of thumb, I mean, obviously try to be under 80% loan. You really don't want to be higher than that. I know a lot of people are starting with FHA loans, so you're at 96.5% to start with, but try to pay that down before you take out too much more debt at the same level. You don't want to be overly exposed in this market. And then the other thing you want to do in this market is, as much as possible, you want to have some cash. So I just said that I'm selling one of my units. That's to create cash. That is just, frankly, just don't want to be absolutely strapped, because think about it this way. if I have my expenses, and then I have my cash flow coming in and my business is down, then I'm going to be broke. I'm going to be day to day in a cash flow mentality. I'm really not going to have that much money. And I really don't want to go through that. I don't want to be broke every day. I want to sometimes have sushi dinner and, drink my Prosecco and whatnot. So that's important to kind of keep the cash there. So that's why you sell. You try to create cash. Like if you have multiple units, you choose one where you think, okay, this is probably not my best use of my money. This is not my fastest growing ROI or anything. And that's the one that you get rid of. If you're sitting on cash, I think you're golden. You're ready to seize a really good deal. And how are you going to find a good deal? You're basically going to find something that would have been listed for much higher, but because of the interest rate has come down. So that's the thing you're looking for. If you're looking for deals and you're running your numbers, that's what you're looking at. You're looking at days on market, and as those days on market get to 100 and higher, you're starting to look for price reductions, and that's where you're trying to get in. Now, if you're calling off-market properties, you're trying to do a lot better than that. You always wanted to buy at say 60% and lower. So now it's like absolutely, without a doubt, you want to get in as low as you can. Another thing that's really good to do right now is subject to or owner financing. I mean, if you can get the terms that you want and the rate that you want, not have bank rates, you're pretty good. And another thing that I'm doing for this year is I'm a little sick of dealing with some of the banks. Like the commercial banks that I deal with, I think are pretty easy to deal with, but some of the banks for single family loans or 2-family and 4-family, it's gotten a little nuts. The amount of paperwork is, I can't wrap my head around it. I feel like it's a broken industry. It's too much paperwork. I took out a $30,000 loan on a $115,000 property recently. I mean, it's not the best property in the world. It's a little bit of a C-class property, but I always had a tenant and I had a paying tenant, and I wanted to do a little construction work before putting it for sale, and I didn't want to pay out of pocket. I wanted to get a loan, $30,000 loan, to do basically $20,000 worth of, actually I did $16,000 worth of rehab. I redid a bathroom, I did new floors in one entire floor. It's a 2-level house with a basement. Did LVP. It came really good, and I know it will sell for more because of it. This is like an easy investment for me. Some kitchen handles, some baseboard heaters, it's basic stuff, but really it looks nice. New smoke detectors, downspouts for the gutters. All of this stuff I really wanted to get done, and I wanted to take out a loan for it. But the amount of documents they asked me for, they had a portal, I put them all up. And then after putting them all up, they asked me, we also need this, we also need that, we also need this. I mean, it's like, do you want to do business or not at some point? So anyway, that's a very long story to tell you. Try to be your own bank. So there's a few ways to do this. I think the number one way that investors do it is they take out a home equity line of credit on their primary and then use that money to buy something. And then after they do it and they rehab it, they go to the bank on their own terms, refinance it, and take the money back and repay the HELOC. I think that's probably the number one way to do it. The other way to do it is do cash flow insurance on a whole life policy. I haven't done that yet. That's my goal for 2023, is to start to become a little bit more of my own bank. I do use the HELOC system, and it has worked really well, but I really want to increase the amount of bank that I am. That way I don't have to ever go for $30,000 and deal with like my head being kind of, I don't know what the right word is, my head being fucked for no reason. So yeah, that's pretty much the plan. That's my kind of state of the real estate economy right now, because I think my original projection was you're going to see about 2 months of higher interest rates, and then the Fed will come back down to earth. But actually, I was watching Ken McElroy, and he was looking at the Fed's own notes on their website, and they have a lot scheduled, which, they've had all unanimous votes for raising the rates, which means there's nothing yet to stop that flow. So you kind of have to assume the worst and assume that the whole year is going to be interest rate hikes, and the real estate market is going to struggle. So that's really the last thing. And then one more thing about what I'm doing personally, because I'd like to get another Airbnb or even 2 more Airbnb short-term rentals to, manage, put my time into, but really get pretty nice returns on. And I'm also working on doing a new build for 24 units. I bought land when I bought 10 units before. There's 5, 4, and then 1, and it's open land here in this plot. So I want to build 2 3-story buildings. So what we did is we went down to City Hall to take the low density zoning and change it to medium density zoning. So that's the other thing I think you can do, is like just look at what you have and look at, well, how can I make it more valuable? So you're not really buying anything, you're not really looking for a new deal, you're kind of creating a new deal. So like the original money that we invested will be what builds this. Of course we'll need loans and construction loans and maybe some private money, but basically our original investment is our original investment. So just kind of squeezing a little blood out of rock, just look at what you already have and try to think about the best ways to do it. And then one other thing we do, which I couldn't possibly, this to me is like the number one thing from 2022, I couldn't possibly express how important this is to you more, is doing in-house management. So it's not like I'm the manager, like you don't see me fixing a toilet right now. However, it is me running the team of a few contractors, a few runners, a few agents who do jobs for us, and then even a few tenants who are handy, who jump in and do stuff. And that's my own company, and that's all in-house. So we're doing the rentals, we're vetting the renters, and we're doing the turns and fixing stuff in-house, everything in-house. That way I control all the costs, all the results, quality control. I know what I'm dealing with, and I've never had trouble with vetted renters. I've only had trouble with renters that I've inherited when I bought properties that had tenants in them. So that to me is a no-brainer. You're saving yourself at minimum 8%, maximum 30%. That is a lot of money that you're saving by doing it yourself. And while you save that money, you are also able to control the quality yourself. So to me, that's like win-win, no-brainer. I don't understand why anybody would do it differently. Obviously, we're not doing the biggest of deals, so there comes a point where the deal can kind of afford the property management. But at 10 units, 20 units, 25 units, I would keep it in-house. It's really easy to set up a team. I have a system. Feel free to schedule a call with me, go on Calendly, DM me, whatever you want to do to get in contact with me. I do calls all the time with people. I'm happy to help. I also am building just a quick course. It's going to be free for the foreseeable future because I just want to kind of get the kinks out and see how to help people. Eventually it'll cost money. It'll be a nominal amount. It'll never be expensive. I'm not trying to be an internet guru or anything. I just want to express that this do-it-yourself system is really easy to organize. With today's technology, it's super easy, and just kind of a common sense team. It's a small team that I run because I don't want anything big and complicated, and it keeps me on top of everything, involved in everything, yet not really stressed out. I really just control it. And I'm probably a control freak about it, but it's my money invested, so I'm happy I'm a control freak. I think people who invest with me are happy I'm a control freak. So, it is what it is. So, assuming the year's not going to be great, I would definitely try to tighten the belt on your personal finances as well. I'm definitely doing that. We are downsizing a little bit. I have kids, and it's all expensive. So I just want to tighten the reins a little bit and make sure our overhead is nothing that strangles us. And then just go about our business, still investing, still growing, just doing it intelligently, running your numbers conservatively, keeping your property management in-house, keeping everything in-house, and letting it rip. So, I'll also update you guys on how the new units are going. It's probably like an 8-month process, so hopefully by around August we should be off and running with that, but I'll give you little updates along the way. The first step is done, is now we have the legal ability to go medium density, so that's really, really exciting. So really excited by this. This new year's already started also, so hope to keep it running. Good economy, bad economy, we're gonna do the same stuff. So that's also the overwhelming point of it. All right, any questions, concerns, send some comments, and feel free to schedule a Calendly talk. I have a few different categories you can do it for, as an investor, as an agent. Also, I'm looking for new agents. So anybody who feels like they're a little stagnating, let me know, and I can help you out with a lot of training, a lot of education, and a lot of options. I do think my brokerage makes you the most money, so feel free to compare numbers with me anytime. Happy to explain that.